Have you ever found yourself pondering over how the stock market functions? Well, today we're going to unravel this financial mystery together, one step at a time. Imagine a bustling marketplace, but instead of fruits and vegetables, this market deals in shares of companies. These shares are small pieces of ownership in a company, and they're what we call stocks. Now, when you buy a stock, you're essentially buying a tiny slice of that company, becoming a part owner or a shareholder. Trading these stocks takes place on venues known as stock exchanges. Think of them as the physical or digital locations where buyers and sellers come together to trade stocks. Some well-known stock exchanges include the New York Stock Exchange and the National Stock Exchange of India. Now, you might be wondering, how does one decide which stocks to buy or sell? This is where the terms bull market and bear market come into play. A bull market is when the economy is doing well and stock prices are rising. On the other hand, a bear market represents a downturn in the economy and falling stock prices. Another essential term in the trading world is dividends. Dividends are a portion of a company's earnings that are paid out to shareholders. If the company you own stocks in declares dividends, you'll receive a certain amount for each share you own. Pretty neat, right? One thing to remember, though, is that not all companies pay dividends. Some might choose to reinvest their earnings back into the business for expansion, research, or debt repayment. And just because a company doesn't pay dividends doesn't mean it's not a good investment. It all depends on your personal investment strategy. Now, let's touch upon the role of a broker. A broker acts as the middleman between the buyer and the seller. They facilitate the buying and selling of stocks, usually for a fee or commission. In today's world, online trading platforms have made it easier than ever for anyone to become a trader. These platforms provide a myriad of tools and resources to help you make informed trading decisions. So to summarize, 1. Stocks represent ownership in a company. 1. They're traded on stock exchanges. 1. A bull market is when stock prices are rising, and a bear market is when they're falling. 1. Dividends are a portion of a company's earnings paid out to shareholders. 1. A broker facilitates the buying and selling of stocks. Remember, navigating the stock market isn't about quick wins. It's about making informed decisions and playing the long game. It's about understanding the market trends, doing your research, and investing wisely. Stay tuned for our next video where we'll dive deeper into the world of trading. Until then, keep learning, keep growing, and keep investing smartly.